Josh will be joining me shortly here. But welcome to today's webinar, How to Become a Lendable Small Business. My name is Rachel Cottom. I'm the Director of Content Strategy here at business.org, and I'm calling in from Salt Lake City, Utah. We'd love to hear where you guys are joining us from today. So if you'll use the chat function, you can go ahead and drop us a line, tell us the city or state that you're calling in from. We're really excited to have folks from across the US joining today's call. To start us off, I'd love to tell you a little bit about business.org. Here, it's our mission to empower small business owners to do what they love every day, which is why we've partnered with Mountain America Credit Union. Our goal today is to help you learn the key steps that you can take to secure business funding and to maximize your relationship with your lender. Mountain America is a credit union based in Utah, but it serves states across the Mountain West. With over 1 million members, Mountain America is one of the largest credit unions in the United States. And Josh Bennett is the business account executive over there. Josh, welcome. We'd love to hear a little bit about you as well as Mountain America's mission to support small businesses.
Well, thanks so much for having me, Rachel and Micah. And again, welcome to everybody across the nation. It's nice to be able to finally connect with people, right? Rather than just being holed up at home. I'm grateful for the opportunity to share a little bit of my expertise and knowledge. My background is I've been with Mountain America Credit Union for just over 6 years, counseling small businesses to help them to be able to grow in the ways that they want to grow. And again, I'm not going to say that I have all the answers, but in my small amount of expertise, I've found a lot of reoccurring trends in small businesses and things that we can do and resources we can provide to be able to help you to be able to grow. As you can tell, I'm going to go ahead and with Rachel's permission, I'm going to go ahead and share my screen and show you that my official title, as Rachel mentioned, is a business account executive. I have 4 daughters. I also herald from Salt Lake City as well. And my official title with my job is a business account executive, the acronym for which is a BAE, and my kids think that's hilarious for some reason. So, but anyways, again, and so my job is to create and streamline as many processes as we can for small businesses to help you spend more time growing the business. And I hope that today I can give you a few ideas and empower you with some information that allows you to do just that. So most of you that have small businesses, we'll go ahead and jump into it. You've got the business off the ground. How do you make business grow? As you can see by this illustration, there's a few different things that you have on your plate every day. And it goes without saying that small businesses have my complete admiration because they try to balance all these different metrics and all these different success KPIs, if you will, to make sure the business grows the way that it should. Again, there's a lot to cover in this model, but we're only going to cover 2 today. And as we mentioned, the 2 big ones that I found that are the most important for my clients have been how to become lendable as a business, and number 2, how to leverage your relationship with your executive banker, such as myself. Therein lies a few other options to be able to look for some tax deductions and things you can do to be able to apply those into your business. So those are the 3 things that I want to focus on today. So most of us know friends, past coworkers, family members who have tried to start businesses but have been unsuccessful at doing so. There's a myriad of different reasons as to why that is. I found that in my experience that one underlying problem was the culprit of most of the failed businesses I know of. It wasn't because of they weren't attracting the right customers. It wasn't due to a lack of advertising. It wasn't even because they were looking for the wrong verticals. Oops, I just lost that. Give me 1 second. My apologies, try to get this back. Sorry about that.
No worries at all. I'll just take the minute to mention Josh is obviously our expert from the credit union, but I pointed out in the chat as well, we have some folks from business.org, Ian and Maru, who are joining us. And so if you have any questions specifically around business.org or funding or loans, you're welcome to add those to the chat too.
Thank you. I appreciate that. Yeah. All right. Can you see my screen again, Rachel? Sorry about that.
I'm not seeing it right now.
Okay.
3rd time's a charm.
Yes. it wouldn't be an appropriate webinar without some kind of a technical difficulty, right?
That's true. Just
All
adding
right.
an element.
That's right. I appreciate your patience, everyone. Okay, so getting back to my point, my thought was that the businesses fail not because of lack of right customers, right advertising, even lack of sales verticals. The number one reason that I found that businesses have failed in the first couple of years is the ability to not have a plan in place while attracting too much business too quickly. Now that sounds like a really odd problem to have, but it's interesting because what I've found is that the potential downfalls to adding customers too quickly are a few things. Number one, when you get too many customers without a plan in place, you run into cash flow issues, right? So now you can fulfill everything that you've needed to fulfill, but when it comes to ordering more product, you're stuck because then there's a gap there. You haven't gotten paid for said product, but now all of a sudden you're looking to cash flow other things and other orders, and you just can't. That leads to operating inefficiencies. This is all of a sudden you're now not able to sell as many widgets or products as before. Now all of a sudden there's bottlenecks, right? There's you have one thing and then things stops, and then one thing's dependent upon the other, and you can't cash flow it like you need to. This in turn leads to customer service problems. People don't get their product or get the service, and now all of a sudden they're mad. And what's the first thing they usually do? They go to Google and they go to Facebook reviews and give you negative reviews. And obviously we know the effect that negative SEO has on the business as well. So the negative feedback and those types of bottlenecks then oftentimes leads to overextended employees. Now all of a sudden the 7 people or the 10 people that you have in your business now all of a sudden are doing things they weren't asked to do originally, and they're trying to figure it out on the fly. And fortunately, we'll probably have hired good enough people that can adapt quickly, but sometimes we don't. And that's the hard part, is that now all of a sudden people are having to ask to do something they weren't intentionally asked to do, and now they're scrambling. This in turn actually leads to leadership breakdowns from senior leadership. Now all of a sudden senior leadership is having to recreate a bunch of different systems and processes to deal now with the bottleneck. And obviously that leads to inefficiencies in the business as well. As my college-age daughter will attest, this is affectionately termed as a hot mess. And I feel like I'm old enough that I can't really make that term, but I'll say it anyways, just for the sake of my kids. So when we're in the middle of this hot mess, this could definitely have been avoided. And one of the things we can do to avoid this is to become lendable early on. Now they say lendable in small business. Well, how do we do that? How do we put this preemptive plan in place to be able to help facilitate this growth when it comes? Let's talk for a minute about writing things off. There's writing everything off versus writing nothing off. Obviously, there's advantages to doing both, but I'll kind of point out a couple of things that you might want to take into consideration when you're looking for opportunities to find capital for this long-term growth. So some of the benefits of writing everything off are there's greater tax deductions. You obviously have less tax liability. The downside to that is that you have less reportable income. I oftentimes have people that meet me all the time that will say, well, you don't know exactly how business works. Well, fortunately for me, I have a bit of experience of how business works. And even though you may show on your financials that you made $400,000 this year, but your financials only show that you're $75,000 of reportable income, unfortunately, going into the lending process, that's the number that we've got to take into consideration. So you do have the advantages of writing off the tax deductions, which is great. But at the end of the day, to try to qualify for traditional financing, we have to be able to go off of those government issued documents like tax returns and pay stubs and things like that. Again, the benefits of writing almost nothing off is that you have smaller tax liabilities, or when you write everything off, but then you also have the tax you have to pay for that. So there's a very, very fine line that you have to draw between writing everything off and writing nothing off. I typically have my customers, I make it recommended. Again, I'll preface this by saying that I'm not a CPA and I'm not a tax attorney, but I do make the recommendation of everyone putting about 25% of their gross profits in an account for taxes. And the reason I say that is because if for some reason you're someone who likes to write everything off, then you have a little bit of a slush left over. But if you don't write anything off at all, then it gives you a little bit of a side account to be able to say when that tax bill either quarterly or annually comes due, that you have the flexibility to pay that. And then it's not such quite a punch to the gut when it does happen. So now let's talk for a minute about qualifying business credit. What I mean by this is that we refer to loans, larger lines of credit, vehicle loans, credit cards that are all in the name of the business. Most financial institutions will tell you that it's much easier to qualify for financing before you need it and while you still have outside income. What I mean by outside income is, say, for example, you're starting a new side business while you're currently working a full-time job, or you may sustain a part-time job while you're starting to get this business off the ground. I always advise my clients to be able to apply for financing while you still have that outside income, because once you depend on the new business for your sole source of income, it gets a little bit trickier. This is where the presentation gets super nerdy, so feel free to ask me if this doesn't make sense. So typically, when you're trying to get credit or some type of capital for the small business, they'll usually want a personal guarantor. A personal guarantor doesn't necessarily mean that credit responsibility is yours personally, but they will look at new businesses versus industry tenure. Typically, most financial institutions will look at something younger than 2 years old as a startup. They'll look for this type of outside income for lines of credit. Again, I say credit cards, other unsecured loans, things like that. If it's older than 2 years old, they'll usually want to get tax returns. And again, therein goes the applicable statement of writing off little things versus big things, writing everything versus nothing off. That's something that I would completely have you strategize together with your accountant. And we'll get to that in a minute. If you're looking for equipment financing, we're looking at things like industrial type of equipment, other types of business vehicles, other types of maybe construction equipment. The typical down payment for businesses is usually between 20 and 30% of a cash injection, or that's what we call it in the financial world. Most people know that as a down payment. Usually there are some institutions that will do this type of lending without any type of money down, but the trade-off for that is typically a higher interest rate. Usually in that type of realm, you're looking at, with equipment financing, it's usually somewhere between 2% and 5% as a general rule, whereas without any type of money down, you're looking more in like the 6 to 9% range. And again, that just kind of depends on what you're looking for, what the economy is doing at the time. But typically, it's considerably higher if you're not willing to put a little bit more money down. So when talking about striking a balance about writing everything off, I would make the recommendation to hire a great accountant. As I mentioned before, I'm not a CPA, I'm not a tax attorney, but hiring an accountant can be crucial in determining what that balance is between writing things off and not writing things off. A good accountant, and I always make a recommendation that most business owners talk to each other, whether in the industry or people that they know. Usually people that I know that there's people that you know that you've worked with or that you know that have good accountants. Usually good accountants should usually be able to be really good at advising in tax strategies, determining this balance to be able to make yourself lendable, to give you enough of that tax returnable income to qualify what you need to, either both now and in the future. For example, should I be writing off my personal vehicle for business purposes? Should I use my personal credit card for day-to-day expenses? What type of a line of credit could I use to help fill that gap we talked about earlier? What kind of resources are available to me, and your accountant should be able to help you identify that. The other thing a good accountant should do is seek for outsourcing opportunities, looking for opportunities to be able to have somebody come in-house to be able to do things like your SEO management, maybe your bookkeeping, other things that people do really well so that you can focus on things that you do really well. And again, it seems like it's the more expensive way to go up front, but a lot of the successful businesses that I've consulted with have found opportunities to, as they say, farm off that those types of responsibilities, or find someone to sub that out to. So that's something that they'll initially have to pay for, but it's something that really kind of helps businesses kind of grow into that space a little more comfortably and find opportunities to grow strategically rather than all at once. And again, also going back to the idea of finding outside income, and a good accountant will have some contacts to be able to know where you can find that type of financing. I have a lot of strategic partners that are accountants and CPAs and tax attorneys that oftentimes will refer me business for people who are in this situation to help them to be able to become lendable earlier and finding opportunities earlier. So at this point, I think I'll go ahead and take a quick break. I think I've talked quite a bit in the last few minutes. Do we have any questions as of yet? Rachel, I haven't been looking at the chat, but are there any questions we can answer, at least for right now?
Yeah, one probably that applies to the discussion you were just having. Jojo made a point that for many new small businesses, especially brand new small businesses, one of the biggest challenges is to get funding without requiring that personal guarantee, since most financial institutes don't offer like a more non-traditional source of funding. Do you have a suggestion for those brand new businesses who are worried about that personal guarantee?
That's a great question. And in fact, this is one I actually do get quite often. As far as a personal guarantee goes, most financial institutions will require a personal guarantee. However, most of those institutions will now report to some type of business credit bureau for business accounts. Some of the names you may have heard of before, there's companies called Dun & Bradstreet. I know that Experian now has a business arm that they actually report to. Us here at Mountain America, we actually do report to that business Experian credit bureau. In our situation, none of the business loans that we do, whether lines of credit, credit cards, car loans, if they're under the name of the business, do not get reported to personal credit. However, most financial institutions, including Mountain America, do require that we have some type of a personal guarantor. So even people like Jeffrey Bezos and Gail Miller, who owns the Utah Jazz, they do also provide types of personal guarantors, even though the responsibility of payments and balances are typically, in most situations, held to the responsibility of the business.
I see. So one of the points that you're making is that even though that personal guarantee can seem a little bit frightening when you're starting out your business, it actually helps you build that business credit, which makes you even more qualified for additional funding in the future.
Absolutely. And again, like I said, the nice thing about working, and we'll talk about this in a few minutes, about working with a personal banker, is they have someone who can actually advocate for you, who knows your situation a little bit better and can help you navigate through that, some of that as well. So
awesome. Thank you. That's great.
Of course. Any other questions yet?
I think that's the first question for now. So we can keep moving through and then we'll gather some more questions at the end. Thank you. Okay, awesome. Okay. So the next thing I'll talk about is executive banker versus branches relationships. Like myself, like I said, I've been doing this for about 6 years, and I love to be able to find opportunities to help people to continue to grow. There are some definite advantages to having an executive banker on your side. But let's kind of quickly talk about the difference between a branch relationship, meaning the branch of your individual financial institution, and having somebody as an executive banker. Most of the basic branch relationships are things like in-person transactions, getting copies of checks, copies of statements, ordering checks for you, making deposits in the physical locations, technology questions and issues. Oftentimes, most financial institutions now have a mobile app where you can actually make deposits and do most of your transactions. If there's any glitches in the technology, either the branch can help you, or they usually have a customer service number that you can call and get those answered pretty quickly. Doing actually physical cash withdrawals, for those of you who are still transacting with cash. Those are the types of relationships that can be done at the local branch. As far as a banker relationship goes, as I mentioned earlier, my goal is to create systems and processes for my members to be able to know that everything they can do online or in the branch can be done online. And so we want to be able to empower you with that information and that capability and functionality so that you can spend more time growing the business and not have to worry about coming to the branch if that's not part of your regular routine or necessary for the business. We also help to kind of utilize cash flow payment methods. Most financial institutions nowadays will have the ability to send wires online, to send ACH payments online, to be able to do what we call remote deposit, when you can actually have a scanner in your office and take checks there in your office. Again, things that will help to be able to minimize any hold times there might be on checks, really being able to transact as quickly as possible, as real time as possible, as well as being able to look good in front of your customers. Someone who looks really professional on that end, that can transact quickly, make payments quickly, make payments on time, is really critical in today's environment. And then, as we talked about with an accountant earlier, just seeking outsourcing opportunities, finding people that can help you fill your gaps.
Say, for example, you might need someone to help you with search engine optimization, or you need an accountant or a bookkeeper or someone to do videos for your business. Those are things that we probably can do ourselves with the technology we have with phones and computers. We can do that, but there's people who do it really well. And you don't have to spend an arm and a leg to be able to do that. Again, going back to the adage that I believe in is that you can always tell the businesses who take the time to employ people who do things more efficiently and do it a lot better so that you can spend more time doing what you do best. And then most importantly, just having a banker on your side helps to advocate for your business, both internally and externally. When, say, for example, one of my clients applies for a car loan or applies for a line of credit or does something big with an SBA loan or a commercial real estate loan, sometimes they'll come back to me and say, okay, this deal looks strong, but tell me what you know about the relationship you have with them. And to have somebody on your side, to know your business, to know your history, to know how you do things is critical, because in most situations can be and are the tipping point between whether or not something is qualified for or not. Now, obviously, with having that relationship, you can't violate lending guidelines or lending laws, but oftentimes having someone that advocate for you just gives somebody the opportunity to be able to be on your side, and someone who kind of knows your situation. We know every situation isn't different. We at Mountain America don't just put things through a approval process and then all of a sudden spit out a yes or a no. We understand that there's extenuating circumstances in pretty much everything. So it's nice to be able to have somebody internally that's lobbying for you. And then externally, as your business banker is out in the community visiting with other businesses, it's nice to know that somebody actually is advocating for you. If I have a client who needs a certain service that one of my customers provides, I'd love to be able to connect those people, to be able to know that it's someone that I've worked with. The relationship of trust is strong between a business member and their banker. So to get those types of recommendations are usually ones that go a long way and are very, very meaningful going forward. So let's see. I think that's all of the material that I had today. Is there anybody else, any other questions that we have at this point, or any other things that can talk a little bit more?
Yeah, Madison actually had a question about the banker relationship. She said, if I use a personal banker to help with my business, am I required to retain them for a certain amount of time, or can I switch my business's banker at any point?
Absolutely. That's a great question. You're welcome to switch those. There's no contract that's in with those types of business relationships. You can switch back and forth at any time. In fact, most people have the misconception that they have to use a large bank for businesses. And it's really nice to be able to know that, even credit unions nowadays are able to do the same things that banks can do, usually at a lot cheaper option. And if all of a sudden you find something like that, and you find something, there's a resource that you can use that's more advantageous for your business, I'd say go for it. I think that would be fantastic to be able to switch. So yeah, there's no obligation. If you do find someone who does make you sign a contract, that's probably the first sign you probably should be looking other ways, because there's no reason for them to lock you in long-term for something like that.
Yeah, that's great advice. Thank you. Do you have any additional advice around the traditional bank piece? We had another question about what kind of things small business owners should be aware of when they're looking at funding for a traditional bank versus, say, looking for funding online. Are there any pros or cons that you would add in addition to that business relationship? It's the online banks are great. I think the one thing feedback that I've gotten from my members is that even though it is online and it's easier, and if it works well for you and you don't need that personal contact, then that's fantastic. Go ahead and use that. I'm not going to say that one institution is better than the other when it comes to meeting your needs. But a lot of times people like to be able to just have that one-on-one contact, have that. So if something goes wrong, or if they have questions, it's always good to have someone physical to contact to, or someone to talk to, rather than having to call like an 800 number or getting on a chat on your phone. It's just different styles for different people. And that's why it's so nice that we have this many options, because everyone's business runs differently, and everyone has opportunities to do it and operate as they need to. If you're an entrepreneur that likes to start working at 1 o'clock in the morning, and believe me, I get plenty of emails at 2:30 in the morning, then that's great. The online versions are great for you. But again, if you're looking for something, whether at a bank or a credit union,
that you want to be able to have that personal touch and have that advocacy. If that's important to you, then that's probably the person I would recommend to have something like this.
Yeah, awesome. Looks like Melissa had another question, and Ian may have already answered it for you, but maybe Josh, you can lend some more insight here. As far as getting a line of credit or a loan from a credit union, do you have to be a member? And if so, is that the best course of action? What benefits could that provide for your business?
Well, in truth, I mean, most financial institutions would like to have your entire, as they say, your relationship, whether it's a personal or business. And if you were to look for a line of credit, they probably would require you to open some type of a small operating account. But as far as be able to function completely with that financial institution, no, there's no requirements for you to be able to do that.
Cool. Yeah, that's great. Thank you. What can small business owners do to prove that they're a good investment to a traditional lender like you?
I think it's, it's, and obviously, like we talked about before, we can't really necessarily violate lending laws or guidelines or things like that. However, a lot of times financial institutions like Mountain America will actually go off of projections. So if you've been, say, for example, you've been in a certain industry for a while and you decide, I can do this more efficiently and a lot better, you could actually, that job history in that industry is really, very important. So if you decided that you want to go branch out on your own, that's a great opportunity to sit down with a business banker and have that conversation. Because most people may not see, they may just look at it and say, this person's just starting a new account. We don't know them from Adam. It's good to be able to forge that relationship, to be able to show that I'm not just coming into this brand new. I have 12 years of experience, for example. Now we're jumping into a new business. We've had some great success. That might help in explaining the situation to be able to be lendable as well. Also, there are some financial institutions when you go to apply for loans, and I can't say this is for all because it's based on qualifications, obviously, but there are opportunities where you can qualify based on your credit. Some people with kind of A to A plus credit have opportunities to be able to qualify for things without having to verify income. And you may want to reach out to your financial institution and find out if they offer something like that. But most financial institutions do. And again, I can't say everyone would qualify for it, but I can say that it is an option and it is available if you wanted to look into that.
Yeah, that's excellent. You've talked a lot about, the lending laws that obviously you probably know like the back of your hand.
That's right. If you ever can't sleep at night, call and I'll tell you about it. So.
I mean, I am curious, is there like an 8th grade level version of those lending laws that some of us who are not as familiar with financial institutions should be aware of as we're starting our businesses or trying to get more funding?
Yeah, I mean, it's a very basic. I mean, basically, to be able to qualify for any type of lending, they usually like to have government approved documentation, tax returns, W-9s, W-4s, things like that. They're just ones that are typically in times past have been things that you traditionally use for those. The financial institutions are now looking for opportunities and more diverse or liberal ways to be able to qualify. But at the end of the day, it's those documentations that you usually need to qualify for something like that.
Yeah, that's great. And for that documentation, that's typically something that you would have just had personally, or is that the point where you should probably bring an accountant into the conversation?
Yeah, I would always recommend enlisting an accountant and or a bookkeeper from day one, because they're going to be the ones that they're going to set you on the right track and actually get you to where you want to go. I make recommendations to my clients, but I do preface it by saying that I'm not a licensed CPA. I don't do taxes, but there are plenty of people within your community and in your own circle of influence that probably know someone that would help you get on that right track to start out with. So again, things like W-2s, tax returns, things like that, your accountant and CPA should be the one to be able to get you on that right track.
Yeah, that's great advice. Thank you. We do have a few more minutes for questions here. We've got another 1 or 2 popping up in the chat. Please feel free to add more as they come to mind. This next one says, do you have any tips for understanding how much financing I need? Is that something a banker can help me with, an accountant? What would you recommend?
I think it's something that I would I'm more than happy to guide them through that conversation. I definitely would enroll the help of an accountant. They'll know exactly how much you're needing to be able to show that lendability if you're needing to purchase a new building, or a space or a vehicle or a credit card or something like that, they'll be able to be able to show you, okay, if you actually can report X amount of income, you'll need to write off this, write off that, or not write off this and write off that. They would be the best ones to be able to have that conversation with you. And even though most accountings are busy, they love when you actually have a proactive business owner come to you and really want to be on the right track, because then they know that you're actually showing you're being proactive about being fiscally responsible. And so they do love to be able to have those conversations with someone who actually approaches them about it, rather than having to wait till you're in the middle of a train wreck, whether it be a tax issue or a liability issue or something like that, to be able to kind of pull apart that proverbial ball of yarn, trying to make sure they make sense of it at first. So yeah, I would definitely reach out to an accountant, or again, a bookkeeper. A tax attorney would also be a good option as well, to be able to determine exactly how much you need.
Yeah, that's great. And if there are certain types of things that, we're trying to fund for our businesses, say we opt out of renting real estate, we're going to work from home and all we need is inventory. Is it easier to obtain a loan for certain kinds of things like that? Say, a real estate versus inventory, versus if we're just making it online and a site and we just need a little bit of capital to get going, what's the easiest kind of funding to secure?
Sure, that's a great question. Usually most financial institutions will like some kind of collateral to be able to get you the lowest interest rate. So when I say things like that, I'm talking about they do something like lines of credit, even like home equity loans. Again, it can be used for business purposes and used as a tax write-off. Now, again, that's something else I would actually have you talk to your accountant about and find out what the best situation is for you. But typically, with any type of collateral loans, because they are easier, because if you think about it from a financial institution standpoint, they want to be able to lend on it and recover on it quickly if they needed to, if something were to go sideways. And so usually with homes, with cars, with buildings, that's considered lower risk. And so when it's a lower risk, you're going to get a lower interest rate. And so when we refer to that, I look at that as what we call less expensive money, because usually those interest rates are pretty low. Right now, most financial institutions across the country are doing really low rates on home equity loans. And again, you can reach out to your financial institution and find out how to do that. I would love to help out, point you in the right direction if I can to find that funding. But again, most situations, a lot of business owners do use that as lines of credit to be able to help with things like inventory. If it's something that's not quite as what's the word I'm looking for, appraisable, so to be able to determine value of what that is, there are a lot of financial institutions that will do any type of loaning on equipment or accounts receivable or type of inventory or something like that. Typically, it's a little bit more high risk, so the rates are going to be a bit higher. But if that's your only option, at least as a temporary fix to get started, that most financial institutions have that as well. If they don't, they usually have partnerships with other outside agencies that will provide that type of financing as well.
Yeah, that's excellent. The next question is around worst case scenarios. So say that the business is not doing well at a certain time period. Maybe they're in a growth period. What can be done to maintain that good relationship with the lender that you emphasized?
I think is regardless of what happens. I mean, if your lender really knows what's happening, or if your banker really knows kind of what your situation is, they have a lot of different options to be able to do things like that. Right now, I, for example, I'm right in the middle of helping a friend of mine who has become a friend, who's a client, that has running into a situation where he needs to consolidate a lot of debt. We finally did, through the connections that I have, be able to find someone that can help him do that. Not the prettiest situation, to be quite honest, but again, he understands it's a temporary fix, right? He's kind of put himself in a situation where he grew really quickly. He knows he should have put a plan in place earlier, but hindsight's 2020, right? So we were trying to get him a temporary fix to be able to put together some of that inventory. And most of those opportunities are usually done at a regional level. So again, if you reach out to your financial institution and have that relationship with a banker, they could probably put you in contact with some of the people that they have to find temporary fixes for things like that. So yeah, it's definitely possible, but just know going into it that you may have to bite the bullet for a bit to be able to consolidate some of that, pay a little bit higher rate. There may be some fees involved, but it's definitely doable. And once you get out of that, you also always have the opportunity to either consolidate that with a financial institution once things start to go better. You can show more income, things like that, to consolidate some of that debt. So just know that if you get into something like that, it's not there forever. There's definitely ways to get out of that.
Yeah, that's great advice. Thank you. We're almost at time, but I just want to ask, what's your one last golden nugget, one last piece of advice that you would give to small business owners trying to get funded?
What I think the biggest thing I would actually recommend is them having somebody on their side, like a business banker. Oftentimes we understand that small businesses get stressful, and we understand that you've got multiple different things you're trying to juggle all at one time. Just know that the banker is there to help you, and just know that they have opportunities for them to look through it. And again, the more they know about your situation, the more you maintain that relationship, the more they're going to see how much you're going to want to work with them, not only for the financial institution standpoint, but also for you personally. And like me, the more I know about someone's situation, the more I am willing to help them. I'm willing to give you all the tools and resources you need to be successful. And then once you can actually take that and implement that into the business, the more likely that someone's going to be able to help you in the future, seeing is that you've taken what they've given to say and put it into place. Now, again, going back to my original statement, I don't know everything. I just have my years of experience, but I know that the more you can actually work with someone and have them know their situation, the better it's going to be, and the better the more opportunities you're going to find as you strengthen that relationship.
Yeah, thank you. That's fantastic. Well, thank you everybody for jumping onto the webinar today. Josh, if you wouldn't mind throwing your contact information into the chat. I know you've mentioned a couple of times that folks are welcome to ask you the questions directly. So if you guys want to find that in the chat, you can reach out to Josh. If you're interested in exploring more of the funding options that are available for your business, you can just go to business.org/loans. I'll have Ian put that link in the chat as well. So just business.org/loans. And you're welcome to reach out to anyone on either of these two teams. We are so impressed by the work that small business owners do. You are resilient and creative and courageous, and we're here to help you keep doing what you're doing. So thank you for being on the call today, and have a great week.